What's up, everyone? This is Midnight Brands coming to you on Tuesday night, doing prep analysis for Wednesday, September 14th, 2022. Hope everybody was able to navigate today. Really nasty print coming out of that CPI. It was a little tough, I will say that for sure. Had some nice wins, but really disappointing pieces to be sure. Actually had a short on just a couple MES contracts going right into CPI. Saw some things line up that we'll touch on later as we progress through this channel stuff here and whatnot. But man, saw some couple pieces that looked just really interesting and just kind of chickened out. I set my stops way too tight. I think was at oh man, what was it, like 40? Oh, I can't remember. We'll pull it back up here in a second and see. I think entries were 41.50 and our stops were like 41.56 and stops were up at 41.67, 66 something. And obviously that spike on CPI took it up to 41.74, and then it just began that waterfall we saw all day long. So tough one, but still was able to navigate by being prepared, which is the whole point of these, folks. I mean, really, we're trying to again highlight the things that should bring you some opportunity in the market by trying to remove the noise of the thousands and thousands of stocks. So with that, we'll just remind everybody we are not financial analysts. We're not financial advisors. Nothing we do or say or talk through is any kind of a buy or sell recommendation, and nothing we've ever talked about here, now, or in the future is any kind of a guarantee of results or anything else along those lines. So all we're trying to do is just walk through some educational type of content, share what our thoughts are, and walk through kind of what we are seeing in the market. And so with that said, we will jump into things, and we will start first with the breadth prep. Breadth prep, again, getting into the bigger kind of tickers that have an outlying move in the index, starting off first with Apple. Also got on here tonight for some tickers, not all, some tickers and an indicator piece that we've been working on that has to do with we'll just say it has some interesting levels to keep an eye on and watch. And we only are putting this on for a handful of tickers. We have different option type of things we can go through and track and keep an eye on. And so with Apple tomorrow, really interesting zone. There's actually two interesting zones on Apple. And the first one is up near today's highs, but not at them, up at that 159.24 to 158.23 level. But there's also a really interesting one down here. And so this starts getting into some supply and demand zones that we've got carved up. We also have a gap fill, which is what's represented by that yellow dashed line. And so this is another pretty interesting level, and it could do something where we come down. These are a weekly anchored VWAP and a daily anchored VWAP here. So we could maybe potentially come down and tag these and then close above this daily or weekly. And you can see there's the daily there. So it'd be really interesting to see what and how this one plays out for tomorrow. Next up on the list is SPY, and SPY has also got a pretty interesting one. It's going to be up near the highs on it, and its bigger zone here, as you can see, is up just about like 401 to 390. 401 flat to 399.08. And that may sound like a lot, folks, but if you think about the fact that SPY had an $11 move today in the ADRs, not from up here. The way that we're looking at and tracking ADRs is from that level down to this level. So that way you be consistent and whatnot. So there was an $11 real-time hour move. If you want to count ETH, then it's an even bigger move, obviously, right? Because we went from closing way up here at 411 all the way down to the 393. So that's even more massive if you look at it on an ETH perspective. So again, pretty nice one up here towards the highs that could be very interesting, especially as you see the swing AVWAP starting to come in there as well. Next up on the list is Drip, and we'll hit a couple more here on the breadth side, and then we'll flip into the overall scores. So Drip has several different pieces of evidence in this one, including a 20-day EMA and a daily anchored VWAP and a gap fill. And then there's some other pieces in this one as well. So it's going to be up here at the highs. This 20-day, I mean, it looks like it's outside. I drug this up before when I was looking at some other things. You're thinking that, okay, well, maybe we come up, get everybody excited, thinking that we're going to just stop right here at the 20, pull back a little bit, and then go up and collect this gap fill and div into that bigger level, this daily anchored VWAP that not everybody may have in their charts. So have to see, keep an eye on it, but that bigger level for drip again, 1632 to 1616. Gonna skip KB Web and Yang. KB Web is a fin for kind of regional banks and whatnot, and Yang is on the one of the leveraged Chinese ETFs. And so we'll flip into XLE, which tracks energy. You know, like most everything else, right? Pretty good size outlying ADR move today. Bigger zone for this one is going to be actually down here at the lows. And so you can see on XLE, the black dashed line tells me that it's 50-day EMA. And then the fact that the box is automatically colored for me in blue, I know that that is got ADRs in that particular area. So really interesting on that one. There's also been some structure over the last several weeks at around that $78 mark. So definitely be one to keep an eye on in that area. So maybe be up here, kind of, 78 kind of looks like right smack dab in that area. And you can see some of these wicks throughout in here at this, trying to get above and stay in that area. So that's XLE on that one. We'll hit on SVIXI, which tracks the other side of the VIX, and then we'll hit Tesla, and then I think we'll hit DIA in this batch here. So SVIXI for tomorrow, what do we got here? So its bigger zone is also at the lows, and you can see we've got, you can tell I've got a daily anchored VWAP and a weekly anchored VWAP on that one. We also have ADRs, and there's actually, to be honest in looking at it, there's actually two zones here in SVIXI. The other one is all the way up here actually, and it did the same thing earlier. Kind of the zone was a little bit bigger, and kind of made a judgment call and said, hey, we're going to just pull this up a little bit. Again, kind of thinking the same thing we just had a minute ago, is maybe we come in and kind of hit that, pull back a little, then go up and collect additional evidence up there. So that was the audible to kind of shrink that up a little bit. But SVIXI has the two zones, the 53.86 to 53.67. And then down there at the lows, the 51.21 to 50.96. I mean, it says there is the third one down here. I mean, this would be pretty significant to come all the way down here. This would be a couple deviation type of move to come and grab this full one. Not impossible. Right? We had a $2 move today. So, a lot of times we have these bigger outlying moves. It's not uncommon to see kind of back-to-back bigger move days. Next on that list was Tesla. And Tesla, if we scroll a little bit here to the left so we can get the rest of our VWAP indicators and whatnot to show up in the drawing here. That bigger level for Tesla is going to be down at the lows. We can see we've got a swing anchored VWAP. Again, swings are attached to like a 5 or 30-minute calendar candle. And so anyways, it's bigger zone for tomorrow is going to be down there at the lows. And you can see some of the pieces of evidence that we put on the screen here at the moment will be just the 20-day EMA, the swing anchored VWAP, gap fill. And then it was actually the week ending September 2nd, its highs were in this box here as well. Last up on the list for breadth for tomorrow is going to be DIA. Diamonds is tracks the Dow Industrial Average for this one. DIA has the one zone. It's at the 319.70 to 318.72 area. And it's going to have a couple pieces of evidence as well as yesterday's high. So this would be a really interesting one, kind of like SPY, if you remember a little bit earlier. It also kind of be getting up there in terms of the moves, expected moves and whatnot for a day, and kind of seeing how things will progress. So definitely some interesting ones in here, and you can see, I don't know if we've actually talked about this, but all of these different rectangles have to do with marking and denoting the different zones of interest for the day. And again, the whole point for the RoyalFlush concept is to find those higher interest zones. So you're not having to look at 20, 200, 2,000. You're looking for those handful and paying attention to when those bigger interest zones hit. With that, we'll take that quick little pause here as we move a couple of pieces around on our screens for us and go ahead and pull up the overall breadth prep. Again, overall gets into a bunch of the other tickers in the general market and kind of seeing where they're at. Again, also trying to filter out noise and find the right ones that are going to have some interesting levels for the day. And so TMUS, T-Mobile US, has got a nice little zone here up at the highs, the 142.04 to 141.23. There is, you can actually see there is a weekly anchored VWAP here, but the way the algorithm works is it will actually leave it there for another day or two. Weekly anchored VWAPs don't get invalidated the second they get validated or violated, I should say. So and as something is older, it gets a couple more strikes. So you think if it's a fresh daily anchored VWAP or swing anchored VWAP, it's got some time. It can get 3 or 4 strikes of prices closing significantly above or below based upon its anchor point. And so this one, I know, like, if we don't start to recover on TMUS here, that particular one will get removed. But there is a swing anchored VWAP from the highs here with that red dashed line telling me, and this looks pretty interesting. This would also be kind of up into a second deviation type of move if we think about that one for the day on TMUS. A couple other interesting ones in here. I'm going to skip a bunch of these. I was talking with some other people in a different room, and we were kind of noticing that a lot of the consumable type of things, Pepsi, Coke, I think Procter, or maybe Colgate Palmolive, I forget. There's a couple other ones in the list of things that they kind of went after today as well. And you can see there, right? Pepsi's normal average daily range is only like $2 to $3, like $2.50, $3. Even Monday is $1.69, and then today, damn near $6. So they really started going after some of these today. You can also see down here, this tracks ADRs, the average daily range, as a percentage, because it just makes it a little bit easier. This was a outlier move big time today. So you could have even waited towards the end of the day and try to see it come up into this kind of bigger ADR percentage tier, and maybe have taken it along there. That is also something else that's in the packages and whatnot we use today that drives some alerts there of, hey, you're coming into an extreme ADR tier, you might want to get something ready. In any event, bigger zone for Pepsi tomorrow. Again, there are 2 of those bigger zones, but probably the bigger one is down here at the supply and demands and some other piece of evidence down in this particular area. So that is that one, and I think we were going to hit on UPS because UPS is a pretty big, just in terms of the broader market and what else is going on. And UPS's bigger zone was up here at the highs. You can see at that 196.47 to 196 level. So, like most all these, I always say pretty interesting, but man, like I just, even though this thing is built and even though it's been scanning for a while now, it's really, really, interesting to see what and how this picks up these different elements in here, from finding supply and demand zones to finding the zones and scanning all these various pieces to, again, find the right evidence zones. So yeah, I think that'll do it, folks. This was prep for September 14th. Hope everybody was able to navigate today. If not, I think there's a great quote, and I mentioned this a little while ago by a gentleman named Lance Breitstein. I'm not sure if that's exactly how we say Lance's name, but Lance had a great kind of tweet a couple weeks ago where it talked about, if you're not prepared, you don't feel it, just walk away. The market's going to say, hey, you got your shit together. And you know what? Candidly, if you don't, it's effectively paying you to stay away for the day. So if you don't got it, you're not feeling it, just go walk away. The opportunities will come, whether it's long, short. You know, if you're trying to just hedge in kind of where you're playing some iron condor type of things, where you see things are just trading in a range and you want to take advantage of the volatility, just wait for the setup. I can't tell you how many times we messed up the day by not following that advice. So always helps when you see somebody else put it in just the most basic and simplest of terms. So anyway, thanks again, y'all, and hope you have a good one, and we will catch you tomorrow night. Bye now.